Hello, welcome to the Market Ladder. I'm Joel, I'm the Chief Financial Technician here, and today we're going to do a market status update. Today's date is July 30th, and we're going to do it for the month of August. The market condition is bullish, but a pullback is likely. We're going to do a little trade talk for the Market Ladder members after that, and that will conclude this video update. As always, I must get through a risk disclaimer. I am not a financial advisor. Investing in the stock market is inherently dangerous, so please take any trades at your own risk. Thank you. All right, we're going to start off with the NASDAQ weekly chart. So this is the QQQ ETF, which tracks the NASDAQ, which is a consolidation of a lot of stocks. A lot of them are technology related. And every candlestick on this chart is a visual representation of a weekly price action of the NASDAQ. All right, so we've been talking a lot of this, especially for the Market Ladder members, and we had a bullish rounding base pattern all the way through here, and then in 2023 it kind of bottomed out, and it's been upwards ever since. And we noted that we've been noting that for a long time now. Once it broke through this resistance area here, shown as this red band going across the chart, that it would become support, shown as this area, and that we expected very bullish price action. We expected price action to go up, which it has. And so this is very bullish, and my only concern is that it's becoming a little bit too bullish. And when I say that, my main concern is that this blue line right here is very steep. So anytime you get something that goes up that quickly and that steeply, it's likely to have a more significant pullback than we've seen so far, at least since March of this year, when I started drawing that blue line. So I expect to see more of a pullback in the market. And I would say, of course, right here as it approaches this resistance area here, that would be a prime time to get a good pullback. And I say that because if you look at how deep this was, the valley from this resistance area to the lows back in October of last year, it went down 23.2%. And now if we go up to this resistance zone, we're at 23.5%. So I've talked a lot about these legs of equal magnitude equaling each other. So when you get, one leg that goes down 23%, well, our projected target is the same magnitude as that. And so it's 23.2% up to here, and we're in that red zone. So that's just a potential resistance area. It doesn't mean it has to find resistance there, but that's my best guess as to when this pullback will occur, at least looking through it on the QQQ chart. Okay. So next we're going to look at a weekly SPY chart, and this is actually my go-to market indicator chart. I use this one as the number one, and then I'll use the NASDAQ as the number two. So on this chart, you can see even more clearly this rounding base pattern that was formed. Again, this is the weekly chart. This is the SPY ETF. This chart tracks the S&P 500. Most of you have heard of the S&P 500 before, but that's a big conglomeration of a lot of very large U.S. stocks in the stock market, and they're considered to be a very good bellwether of the overall stock market. So that's what we're looking at. And so every candlestick, whether it's this one or this one or this one, is a weekly action of the weekly price action of the S&P 500. So again, we talked about once it broke through this red resistance area that we did expect it to go up in a very bullish manner, which it has. My only thing again is that it's very aggressive, and it's been a very steep curve. We haven't had much of a pullback. You could say we had a little tiny pullback, end of June, but that was so minor it didn't even make a crinkle against this blue line that I've drawn in here. And then if we look at how much it's gone up, again, if we draw this down, it was 14% to the bottom of the lows back the end of last year, and now we're up 11% we're pretty close to that 14% if we draw this all the way up to this potential resistance area up here. So again, I would say that price action gets into this red zone, we're looking at a likely pullback. That's my opinion. The market can do anything it wants, but we'll see how that plays out. Okay, so let's look at the daily chart now, and we're going to look at the daily chart of the SPY or the S&P 500. So all we're doing now is we're going to zoom in a little bit. So now every candlestick is a daily representation of the price action of the S&P 500. So I just want to point out a couple things here. One is that we're looking at the SPY, which is, basically considered to be the overall stock market, or a measure of the stock market performance, I should say, in this chart. So when we've gone up 9.5% from March to April of this year, and then we've gone up 10.7% from early June till now. So we're looking at 20% on the S&P 500. So that's a, like I was saying last time, that's a big matzo ball for the S&P 500. And when you get to 20%, the market sort of generally says, okay, we've gone up pretty far, pretty fast. We want to take some money off the table. We want to let things settle down. Want to take a breather. And at that point, we usually get a bigger pullback. So that's my overall concern. Yes, it's very bullish. We're seeing higher highs and higher lows. Everything's moving from the bottom to the top right, which we like to see. We're generally staying above our moving average, which I like to see, but it's just getting a bit overextended. So when it gets to that point and it gets to be overextended, I like to see what other indicators can tell me that it's about to roll over for a bigger pullback. And like I was talking through the ladder post updates, a couple of things I look at. One is, does the volume start to increase, and does the volatility start to increase? And we're starting to see that uptick now. And so I've just highlighted those. The volume right here, we've got a moving average of the volume bars, and we're starting to see that peak above this moving average line. So we're getting slightly above average volume. And then if you look up here, this is a measure of volatility. And so when I say the volatility is picking up, if this line here, this black line, stays below these two blue lines, then volatility is relatively low. But at the very end here, you can see where it's starting to go up, and it's about to break this upper band. And so when it does that, volatility is pretty high. And so you can see it's starting to peak up. This, by the way, for any of you that are more interested in technical analysis, this is the average true range. And this, I have found out, in my experience, has been the best indication of overall stock market volatility. So it's starting to pick up here. And then, excuse me, I'll go back 1 second. So these, that's the black line here. And then I just superimpose an EMA envelope 25.4 that just sits, that just wraps over that on top of that. So that's what those lines are. And then, so we've got volume picking up, volatility picking up, and then we'll just watch RSI indicator for some bear divergence. So bear divergence means, does price action continue to go up when the RSI or momentum indicator starts to fall down? So right now it looks okay. It's starting to have a slight dip, but we'll keep an eye out on that as well. So overall, the stock market is bullish, but we are getting overextended, and I say a pullback is likely. All right, so for the Market Ladder members, let's look at last week's closed trade. So last week was a bad week. We had just one trade or one ETF that closed out, and both of our half sizes hit our full stop. And so we closed out for negative 2.8 and negative 4.1%. So we had a bad week last week. Ugh. But let's shake that off. And these weeks will happen from time to time. And let's turn that around and so see if we can't get more trades down here in this green area. That's where we like to see them, right? So if you've been following me on the Market Ladder and the ladder updates, I did have a goal of 8 weeks of solid gains. So we got 4 weeks of gains and we stopped that. But what I'm asking to do is, well, I'm letting you guys know I'm refreshing that counter. I still got the 8-week goal. So let's keep that. That's a good goal to have. And what I might do is maybe I'll put this how many gains in a row, or how many weeks of gains in a row we've had. Maybe I'll put that on the performance page somewhere, and it'll just be like a ticker somewhere. It says, our maximum was 4 weeks, and right now we're sitting at 1 or something like that. Kind of like a counter that will just keep track of where we're at. I think that would be interesting. And last week we did a performance, we did an overall performance review. Again, we had 35% gains in 6 months, and I just want to say, booyah! Again, that was very good. I hope, I like that. I mean, I think that's very good. I hope you guys do too. So let's see if we can continue that, or at least continue something close to that for the last half of this year, or the last 5 months that are remaining. Anyways, and then we've got, so doing a performance review was interesting. Let's try to do one again, say maybe a 9-month review and then a year-end review. Let's see how everything shakes out and see if we can't continue that good performance so far. We talked a little bit about last week's trades. We did lose value. We had one that closed out, for a loss, and then we had a lot of positions that just went down. So I went back through and I looked through all the positions we're holding, and I want to say that they're still looking technically fine. And so what I mean is that they're still technically very much likely to bounce back up. Of course, they could hit their stops, but technically they still look good. So let's see what next week brings. I'm still positive on those. I did add a new buy position in Boyle, so you'll see that on the website. And then I did make lots of stop adjustments. So I talked about this a little bit before. We probably will see more stop adjustments as we try to tweak trades a little bit more. But I do apologize because that was a lot of stop adjustments. So I'm trying to make it where you guys can get in and get out in 10 minutes or less on every day. So this one's probably going to take you a little bit more than 10 minutes to go through all those stop adjustments. But the good news is, I think once you get those set, I'm pretty sure we're not going to have to do anything Monday and Tuesday. I'll keep a close eye on all the trades, but I'm going to try not to have any more stop adjustments. So hopefully we can just sit on what we've got for those at least early in the week. And then the market is, like we talked about, overextended with volatility starting to pick up. So I'm going to have to be very careful about what trades I pick up. This is just a tricky time because volatility picks up. Your stops tend to get hit, even though they're not, the trade isn't really going against you. It just has bigger wicks all of a sudden, bigger swings, and your trades get hit. The other thing is that we're very bullish, or we're over bullish. So we're at the point now where we don't really want to take bullish trades where we expect the market to go up, nor do we want to take bearish trades where we expect the market to go down, because it's so hard to time the bearish trades when you're in a bullish market, even though the bullish market is becoming overextended. But we'll tap dance that as best as we can, and I'll also look for trades that are market neutral. I don't have a whole lot of those. I have about 6 or 7 ETFs that I say are pretty much market neutral, and most of those we can play, to the plus, or bottom side, bullish or bearish side. So we'll look at those. We'll continue to look at those. We might start thinning our trades out a little bit and see how the market plays out. And I just want to give you a heads up on that. All right. So in summary, the market is bullish, but it's definitely overextended, and I believe a pullback is likely in the very near future. I think what's driving the market, though, is that inflation has come down, and that's always good for the market. Inflation comes down. Consumer confidence goes up, people go out and they start spending more, companies do better, and the Fed doesn't want to raise interest rates, which starts to stifle the economy. So that's why the market has been doing very well. But at some point, I believe a pullback will be coming. That's it. As always, thank you for watching. And as an old Star Wars fan, we'll tell you, may the trades be with us. Thanks a lot. We'll see you next time at the Market Ladder. Bye for now.